What's up, traders? Why does price stop at places like this? Why does price respect certain levels better than others? I am going to learn by teaching today because for a long time, my friends have been using volume profile in their trading, day trading futures, trading stocks. And I've just been really resistant because I like nice, clean charts. And I can no longer deny how useful volume profile is. I can't. And so I am going to be using it, but also to make myself happy, I'm going to show my workflow for how I use them, draw the lines I want to use to trade on, and then take it off, which ones I select, as well as lots of examples of how powerful it is using Tradingview, because Tradingview fairly recently has put this into their platform and a lot of different ways to use it. I'm going to go through at least 4 ways. So if you are catching this live, just hold on till after the music for people to filter in. And if you're catching this later, skip ahead. You're going to learn something, I guarantee it. Good afternoon. Happy Friday, everybody. We are now in Eastern Daylight Time, so an hour difference for international people. Welcome to the stream. Today is going to be a learning live stream, and that is because I have learned myself something. I've learned about this wonderful, amazing, going to make a lot of money tool called Volume Profile. No, not really, but yes, actually. So I said in the intro that I had been resistant to learning about volume profile. What you're going to notice is on my screen today, we're going to have different iterations of it using Tradingview. Today's live stream, we're going to start on the volume profile first, and then we'll look at analysis later. But as always, get your symbols in the chat. We'll look at them as well as do a deep dive into like Bitcoin, what it's going to do. Very interesting price action here at the end of the day. NVIDIA, we got to talk about that, and the stock market as a whole. And the stock market right now, man, it's bouncing off of these points of control, which is in volume profile. There's 4 ways that I'm going to look at volume profile on TradingView. There's a lot of different ways you can draw it, and I'm going to use all of them. But the reason I've been so hesitant to get into using volume profile is because I like nice, clean charts. If you look at my charts, okay, I'm going to delete all this. It typically only looks something like this. Clean chart, a red line, some of these little blue and green lines, which are basically just 50% levels, and that's it. And oftentimes I will trade by looking at 50% levels, because price throughout the entire time that I've been trading for the last decade has really, really respected 50% levels very nicely. And so that's all I really figured I would need. And honestly, I've been trading futures, I've been trading everything without using volume profile for years. But as I'm sitting trading futures with some friends that are using volume profile, and they're calling out entries left and right, and I'm sitting here being very patient and picky, I'm just, I'm trading maybe once a week. And I know that you don't need to trade every day. I know that you don't need to trade a lot to be successful, but I was trading a little bit less than I wanted to be. And so I wanted to find more of these levels. And at the interest of, expanding my horizons, because you're never too late to learn anything, I finally relented and started looking at volume profile, and holy crap. I mean, just this Wednesday alone. I really started at the beginning of this week, diving into it, and then I started really just voraciously learning about it. But, let me just show you what really kind of gave me an aha moment, and that was Wednesday this week on NASDAQ futures. Let me just get rid of this right here. Okay, so normally I'm looking at NASDAQ futures, and I'm looking for, or any futures, ES futures and NASDAQ futures are the primary ones. Also trade some Bitcoin futures off of it this week. And I'm looking at major highs and lows. And when you're in a consolidation, a choppy pattern like we've been in for the last couple of weeks, it can be very hard to really figure out, okay, like what are the major levels and what are not. And so you're just not going to get that much. You're not going to get that much respect either. But a friend of mine showed me one technique, and this is the first of the 4 that we're going to look at, and that is going to be looking at volume profile for that of, let's say, a move. In other words, if we consider that price on the NASDAQ, we're using NASDAQ in particular here, broke out of its range sometime at the end of, or middle of January, right here. If we look at that and we say, okay, now we need to consider this recent era or this recent auction zone of price, what we can do in TradingView is we can bring up the tool over here on the left-hand side. It is under the same thing as your long and short position, but it's an anchored volume profile. All right. And so from here to here, basically it's going to show us this box which is going to be let me find my little, you can see the square, but it's this area right here of price. Okay. And let me briefly tell you what this means. Oh, by the way, one of the things I've done in my settings here is I've changed it so that I have a row size of 1,000 because I want to be very granular. If you start with the default, I think that it's going to basically just do some blocks like that. And if you're trying to trade, like day trade, you're going to need a lot more. So I put my row size to about 1,000, and that's why you see this nice little mountain range right here. And in the middle, well, not the middle, but the thickest part of the volume profile you're going to see this red line, which is going to be the point of control. Now, I kind of spent the better part of the first week really trying to label every 182287. I remember that off the top of my head. And you can see where, price really interacted with that level throughout its range since the middle of January. And so, to your point, KV, by the way, guys, I do this every Friday. Make sure that you join me every Friday, 4 p.m. Eastern Daylight Time. I wish we didn't have daylight, but we do. And that's going to be UTC -4 for you guys internationally. UTC, GMT, whatever. Or UTC -5. I've confused myself. Sorry. Look it up. But, yeah, links are below. And I have chat on Livestream with Tradingview, YouTube, and Discord. Links are below. Put your questions in the chat because I like to teach. And yes, and so KV just brought up something very, very interesting. He talked about where was it Wednesday or Tuesday we had the CPI? I think it was it Tuesday or Wednesday? Somebody correct me. Because what I want to talk about because it was it was the Tuesday release of CPI, okay? And we'll look at the session volume profile in a minute. But notice how I drew that volume profile. And remember, this yellow and blue area is showing us the entirety of the last and a half of price action. And up to 11:30, let's go down to the 1 minute even. And up to the 1 minute at 11:30, around about 11:30 on Wednesday, price came down. Wait, it's not showing here. I need to draw it. Sorry. It came down and spiked right at that level. Now, you could be saying, Norok, that's hindsight bias. Yes, it is. But this level was the case. And the beauty of it is you can go back in TradingView, and if you do the bar replay to that point, it doesn't change, or it will show you exactly what it was at that point. And so this level for the last month and a half was exactly where it turned right in the day trading hours, right there. Let's go back down to the 1 minute. Boom. Excellent, excellent, excellent trade. Not just today. I'm not just like focusing on one single thing. Today, let me bring up my actual chart from on the ES today. So today on the ES, that's S&P 500 futures, there was a level right here, which is I have identified the last week point of control. And that was where the trade, posted in Discord, traded live, we picked up at 51.76, took it up to my classical level, which is a 50% level, and that was the long trade, and then closed the second contract out when it stopped yeeting or failed to yeet. Okay, so day in, day out, price respects this level. And it's really cool to sit there and watch how price will interact with this level throughout the course of the day. From here, kind of consolidated, came to here, held it, didn't quite touch it, but along off that. It's just, it's one of those when you see it kind of moments. But I'm getting ahead of myself. Let me get into my workflow. And by the way, guys, if you have questions about it, I really want you guys to ask questions because I know it's not a voice chat, but make sure you put in the chat any questions that I can answer those because that keeps me going. That keeps me going and teaching as well. All right, so let's start with a fresh chart. Let's do let's go to the NASDAQ, and I'm just going to delete everything, and we're going to start over. And I'm going to go through my workflow, and we're going to talk about the 4 different ways you can draw this in TradingView and how I use each of those. Okay, so okay, fit that back up. All right, so one thing that I've set up here, and these are going to be indicators. All right, so these are going to be static indicators. You see in the top right here, and how you can look for these is with volume profile in TradingView. And the couple of the ones I have selected is fixed range, although we can do that from the indicator panel, but we'll look at the 2 different ways to do that. And of course, auto anchored. But session volume profile HD, this is the one that I'm using. And then periodic volume profile, those are the 2 that I have up. Okay. And so what I'm going to do is take things to the 30-minute, clean up my chart for everything else, and let's turn these on. Because like I said, I like clean charts, so I don't want to have these up all the time that I'm trading, because then I'm just going to confuse myself. It takes periodic one a little bit more to draw, and I have that period set to 1 week, because what I want to know is I want to know the point of control of the session, in other words, the day, a day's point of control, and I want to know the week's point of control, and then I want to go back and I want to find the ones that are going to be relevant to the present, because a lot of these, just like we were seeing from the NASDAQ this week, or in the case of my ES trade today, came from last week's point of control. And so, and you're also going to see a lot of confluence, and that's what we're looking for. We're looking for confluence. Like if we have a point of control that matches with a higher low or a 50% retracement, wow, that's what I really want to look for. So automatically, and let's do these one at a time. I don't want to confuse myself. Okay, let's look at the weeks. So what I want to do here is I want to go ahead and just draw up and label my points of control. So of course this one, the week is now closed, but this, see, we'll say current week POC. I'll up these a little bit so that you can, oh, that's too big, so that you guys can see this on stream. Let me make sure that, if you got a high definition, if you're looking at this on a monitor, you should be able to see it. All right, current week POC. All right, looks good. And then we'll go here. We'll mark this off. This is last week. Let's just pretend like we're coming into day trading, and then yeah. So, and then mark up that one. So this is another week's point of control. 28 font's gonna be too big. So really the ones that be relevant to us are gonna be like this. Okay. And then we got one way down here. I could probably do this color coded. Let's actually do that. We're going to, you know what, instead of having labels, let's do this color coded. Again, the danger here is that you have way too many lines to be actionable. That is the danger. Okay. All right. We've got our PVP, our periodic volume profile, on what we need. Let's actually just go back in time. Let's pretend like we're coming in Friday this morning and we're waking up early at about 6 a.m. And so we're drawing up these levels for that. Okay. Now take that off and then let's look at the session. So the next one I'm going to look for is the session. And one of the cool things is we can see that yesterday's point of control from Thursday is right here. And so we actually have a confluence. That's pretty cool. And yesterday. Make that yellow because it's important. Boom. Okay. And then we have Wednesday's POC. And right here, the drawings panel. We can do a fixed range volume profile here. And what I want to do in those kind of cases is, like I said, look for, let's say, the past move, basically. We can also do anchored, which basically just picks one point and goes forward. I think that those two are going to be a little more relevant, especially the fixed range one, in some other examples that we'll look at in just a moment. So we'll do that. All right, so we've got these lines, a lot of lines because it's a consolidation, but let's go down to our 5-minute and let's let price play out a little bit. So when I like to trade from the open until about 11:30. That's when Europe goes offline. And already we can kind of see where this prior POC right there, boom. Which one was that? I didn't label it because I was, that's why I try to label it. This was a prior week POC. Yeah, because the weeks were green. Again, this is why I've been so resistant to do this, because, okay, this is like from Tuesday. This is from earlier in February. A February point of control today is what caused it to bounce. There's some good trading off that level, especially if it was at 10 a.m. today. And so you can pull a lot of good points off of a level like that. This is why I can't deny anymore, is when price actually responds to these type of levels. And you can even see it bouncing around, bouncing around, bouncing around. The trade I took today was in the ES. I think it was probably around that same time as well. Yeah, it was right at 10 a.m. because it hit the last week's POC too. That's another thing you'll notice about trading futures. You really want to be looking at ES and NASDAQ futures at the same time if you're trading one of them, because they oftentimes play off each other. But basically, the ES trade that I took off last week's point of control was the same as a point of control several weeks ago on the NASDAQ, and that created that 10 a.m. spike right there. And I think as we go on to, so this is, we're at the end of the day now. Same thing on ES. Didn't quite get to the point of control I had labeled at 5127 there, but essentially that's what held up price today. And there were a few more instances that I traded yesterday on Bitcoin, which we can do as well. But I hope you guys are getting kind of an idea for how you can use it to find levels. But like I said, I like to take it off of my chart because I don't want things to get too cluttered, because I want things to be very, very nice and clean. Oh, and one more thing. I am not by any means throwing out my old methodology of using 50% retracement levels, because as I was trading this, the last week point of control you can see was at 5203, but as this move dipped down, the 50% retracement level ended up being, and maybe I'm lucky, maybe not, but the 50% retracement level of the entire morning move, which I have an indicator here, retracement levels. It's free if you search for it on Tradingview. All it does is just show 50% retracements of 200 bars. That came up to right there where my order was at 5101. I probably did it at 5201.5. I think I took it at 51.25 because I like to play a little off base. But rather than getting up to that ended up being a very good profit target. Maybe I got lucky, maybe not. I am not going to do away with my 50% retracements, because that is what I base, to this point, all my trading on. But yeah, I'm just very pleased with trading off of point of control levels. This is what my chart looked like today. So essentially, you would have seen 1, 2, 3, 4 lines, and that's comfortable. That's a comfortable level to sit there and play. Why I didn't take it at 920 when it hit the level here was because the market had not opened. I don't take pre-open trades. And so like between 9:30 and 11:30, that's when I want to be trading. And so if something hits a point of control within that time frame, I'm going to take it. And I have been up to this point trying to incorporate my past methodology, which is what I call TS recaps, into this type of trading, meaning waiting for price to close back on the side of the red line here, the Tinkinson, that I want to go. But honestly, just taking price off those point of control levels works great. Couple of examples. One at the end of the day here, I was looking at what is it? It was Giga Chad. It was not Giga Chad. GCT. Giga Cloud, not Giga Chad. The guy that showed this to me was a Giga Chad, but so this is a Giga Cloud technology, which is one that he traded, not me, so I can't take credit for it, but he said I got in at 22, and so of course, like everything, I went and did a volume profile of it. Well, first what I did, let me delete those. First what I did was, because I think he got in at 22 a few weeks ago, it's a 50% retracement level from September till February, and he picked it up, he said at 22, but then when I went, and this is a good example of how we can use the anchored volume profile. We can go back to the beginning and we can let the volume profile list itself out. we can identify some levels, namely this little level right here at 24. Oh, let me zoom in. I'm zooming into the screen. 20.27. Okay. It's not just the point of control. I'm trying not to use every single bulge that I see and have 20 lines, but I would say the point of control and then maybe another instance, like let's say that one in particular, maybe this little bulge right here, those can be significant. But what's really interesting is that when price pulled back, the buying this pullback at 50% retracement was a good level. It's a good trade, worked out, but I don't know about you guys, but all I asked for is perfection. And the 20.27 level, and remember that this actually will update if you update the bar replay. So we're not just seeing bars being replayed. I mean, things like, for instance, if we go back with the bar replay to here, watch the right-hand side. It's going to change on the anchored volume profile. Yeah, so it's going to change a little bit. One of them, it actually changes in real time. I think it may be this one. Let's do this. Hang on. I had it where I was doing the volume profile. Let's see if it'll update. A little faster, Tradingview. No, not that one, apparently. Maybe the fixed range one. But yeah, you can actually do some good back testing. I challenge you guys to go back and look at some of your trades that you've taken that have worked really well using one of these volume profiles and see if it didn't match up with a point of control. Because there have been a lot of instances that I've gone through and found that really validate this concept. Really, really, really. All right, so let's see. Again, guys, if you have questions, if you got symbols to look at for the last phase of the live stream for the analysis, make sure you post them in the chat. One thing I wanted to look at here was Coca-Cola. Boring old stock Coca-Cola, but this is one that my friends and I, we got into back in October in that big scary dip we had towards the last part of last year. And this was a utterly perfect 50% retracement level. And like I said, up to this point, I've been content to just use 50% retracements. And so I wanted to go back through all my old trades and find out, like, okay, am I missing anything? Am I in danger of not taking trades if I don't have that confluence? And something interesting happen with this. So if we do, let's say, the fixed range volume profile, and we do it from this part to this part, just going to grab this area right in here, we can see how the point of control did match up there. So we could have had some confluence there, but really we were able to pick it up on the 50% proper. And it was only when I actually went through and did a much longer, like we go back all the way to, I don't know, right here. Nope, wrong indicator. When we go back to the anchored volume profile, let's just say grab this area right here. I noticed that there was a dip, and this is what one of my friends pointed out to me, that oftentimes in points of low volume profiles, you can actually pick up some trades. I'm not sure how I did that drawing, but it was a very low instance in that case. Oh, you know what? Let's do this. Hang on. I know what we need to do. All right, now redraw it. Tradingview. Go. Still basically the same. The reason I did these kind of experiments is because I don't want to only focus on volume profile now and then miss stuff that I would have gotten with even simple analysis. Let's take a look at Bitcoin, because I know everybody wants to look at that. I've got mine drawn up right here, but let's redraw them. So let me check chat and make sure that we don't got any questions or comments yet. So, all right. Can you show what indicators you're using on TradingView for day trading? Yes, Shogun. By the way, that's a good show on FX. If you're not watching it yet, I know that's not what you named your name after, but FYI, I've been watching that show. It's very, very good. Up until this week with day trading on TradingView, again, I'll delete all this stuff. I was using two things: 50% retracements and spikes. Spikes are an indicator that I have in TradingView. If you want it, it's free. All you got to do is ping me on Discord. That way that I have your attention. And essentially what spikes do is they indicate times like this where price spikes in one direction only to snap back the other, otherwise known as a false breakout. By the way, NVIDIA, as pointed out to me by Mav before we got on the stream today, it has done a spike on its daily platform and daily time frame. What it basically is like when price overshoots the prior high, as this does right here, and then closes back inside that red line. That's my first sign of bearishness, closing back inside the red line. And sure enough, people have been trying to short NVIDIA for weeks and weeks and weeks now. But that, especially since this week, by the way, guys, came and held its 50% retracement from the high that it made down to the low that it made on Monday last week. So it was basically the Friday, March 8th high to the Monday, March 11th low, set up a 50% retracement level. In addition to giving us a spike, that is a bearish sign. That if you're shorting NVIDIA, hashtag not financial advice, I'm not mad at you. Finally, I know people have been trying to short it for a while, especially before earnings. Yikes. But you got reasons to now. You have reasons to now. So, but those are the two things that I have been using for trading, day trading. Futures, Bitcoin, stocks, anything. Is just 50% retracements because price very often responds to them, and spikes because when you have false breakouts, you very often get reversals. So those are the two things that I've been using to day trade futures for years. And then this year, as the topic of the video suggests, I have been incorporating volume profile because volume profile gives me a few more levels to try to play reversals off of. And man, it's like, I know there's lots of levels. And I know when you put them on your chart, it's going to get a little confusing because it did for me. When I first started putting them on my chart, I was just, this is too messy. I don't want to see this. Even one of my members of my Discord said to me like, oh man, I can't believe you're adding something to your trading schema. Like I would really appreciate how simple your charts were. Me too, no more than me. But I can't deny how useful they are. I just, and I was being a little obstinate when my friends were using volume profile, like I said, because I was like, I've got my ways. I don't need to change. I'm doing just fine without all these kids and their volume profiles and stuff like that. But man, it's just, you know what? Be humble. Be humble, always be learning. And so, yeah. All right. So that hope that answer. I haven't used Ichimoku. Well, ultimately, Shogun, Ichimoku is basically 50% retracement levels. I mean, the Kijun-sen is the 26 period retracement, and the Senku B or Senku B SKB is the 50% retracement of the wider trends. But you notice something if I put Ichimoku on the 5-minute right here, where if we would have gone back to this moment, let's go back to this moment in time right here. So before this happened, I've got my Kijun-sen here, the green line, which is the 26 50% retracement, and then I got the future SKB here. So I've got two levels to choose from. Okay, so that doesn't help me to have two levels of resistance. And so eventually I was like, okay, what's the premise? What's the fundamental underlying premise of Ichimoku? And it's 50% retracements. And so I started getting to the point where I was just, let me just draw it manually. And once I did that, and I realized that, okay, Ichimoku is only going to operate within the rigid parameters of 9, 26, 52, but not all trends are going to be encapsulated in 52 bars, so I need to manually draw it. At that point, I just realized, okay, I'm going to keep Ichimoku on my indicator list, but I'm going to turn it off, and I'm only going to use 50% retracement levels. And so that is why I came to that point. because it's the essence of Ichimoku. How I still use Ichimoku is doing things like Bitcoin on the daily, because Ichimoku on the daily of Bitcoin has been quite amazing throughout its long history of identifying when you have an Ichimoku breakout with confirmation of the Chikou, the momentum. That is a great indicator of a bullish trend. Likewise, it also, if you don't have that true, if you don't have price on the other side of the cloud and you don't have momentum on the other side of the cloud, that is just a pullback. And so those rules I absolutely still use for trend analysis and identifying whether something is trending or not. Because again, if we go back to this ES right here and we have, even if we set that as a resistance, I mean, this is a bearish trend on the ES futures today. So we know that it's going to stop somewhere. We can't just take, well, sometimes I would take a YOLO long, but we know that it's going to stop somewhere. And so without having all these extra lines to keep things simple, I just took off Ichimoku. And then on TradingView, what I did to kind of simplify things was I basically took Ichimoku code and I turned it into just retracement levels, which shows me the 200 period 50%, which comes up to be a little shortcut for me and then identifies in those blue dots. And so those are the three indicators now I use for day trading, which is going to be the spike indicator, 50% retracements, and now I'm going to start using volume profile. So you picked up QCOM off the monthly SKB. You know what? I bet if I go look at that, I bet it's going to be a 50% retracement or something. Look at that. Look at that right there. So look at my magic 50% indicator. Ooh, what is that? That is basically that. I have not thrown out the concepts I understand about Ichimoku, but essentially it's all the same thing. It's really all the same thing. That's a really good trade, buddy. Look at that. Look at that 50%. It hung around for a couple of years, but it held it. It held it. Yeah. All right. Let me see here. See you later, Tiziano. Glad you stopped in. All right. We're going to get to the analysis things here in just a second, but I want to talk a little bit more about volume profile. Let's do it on Bitcoin as one final analyses, and then we'll start looking at symbols because I don't have a hard cut today, but I'm meeting up some friends. We're going to go see this band playing here in Atlanta tonight. The band is Jordan Peterson. I think it's like some Canadian folk music or something like that. So I gotta meet up with some friends to go see that. Should be a good show. All right, let's clean things up. Zoop all my old lines, and hopefully we can come up with the same ones. All right, so let's start. 30 minutes is a good place to start. Let's do the periodic, my periodic, which is set to 1 week. And let's see. So this week's point of control is here, 72,152. I'm kind of curious because you can kind of see now in hindsight what it did today. Let's go back in time to say Thursday night. Let it redraw itself and see where that changes it to. Because now it's going to incorporate less data. And by the way, these little 3 dots up here, okay, pretty much the same. A little bit higher. Mainly the reason is because, let's actually go all the way back here. Let's see what that changes. Periodic volume profile seems to calculate a little bit slower in TradingView, but that's okay. We only need to draw it once and then do our levels, and then we can take it off. Okay, see, it changed a little bit because we don't have a lot of that upside volume. And again, how this is being drawn is basically where, it's not actually incorporating volume, I don't think. I don't know. I don't think it actually is. It's more just incorporating the price, because in a lot of these things, you don't really have volume. Nor, I've been asked before by other people trying to trade, well, do you use volume, Norok? And I'm like, no. You're like, you don't use volume, but all these things I read say use volume. That's fine. I'm not going to knock it. You can use volume, but you got to understand that I started trading originally back in 2010 on Forex, and then I started trading crypto past 2011. And with Forex, you don't have volume. With crypto, you have volume, but it's going to be only on that exchange. Now with stocks, a lot of trades are done on dark pools, which doesn't mean they're done by evil people. It just means that hedge funds and organizations are trading with one another off the regular market, so you don't actually see true volume of shares being traded. So all that's to say, I learned to trade without using volume, so I don't incorporate it in my trading. So I don't need it. But for the purpose of volume profile, it's really just calculating where price is. And so we can kind of see that as this, let me see if this is going to update itself. See if this, it might actually, okay, so there we go. Okay, now we're seeing the volume profile. Let's zoom in a little bit. We're seeing the volume profile move a little bit. Yeah, okay, so this is how to make it live with that periodic one. So the point of control changes a little bit as time goes along. And so we're coming into Thursday. As more prices come up, it's going to move that volume profile up. Okay, now, there we go. Okay, so now we have a volume profile here as we come into Thursday, 11 a.m. And then it redraws. Okay, now we're coming into Thursday at yesterday evening. And so let's go forward and see. I mean, we already know from up ahead that, boom, that is where price reversed. So we can see that play out in real time and see how this is very, very useful. Because if it's not just backwards draw, we're not just that. I'm a big avoider of anything that backward draws. That's why I don't use Heikin-Ashi candles. But this is something you can see in real time how effective price responds to these volume profile levels. It's just kind of blown me away. Kind of blown me away because I've been able to really see the efficacy of this in real time. Already traded it. The money I made today was all from volume profile. It's just, I can't deny it. I'm glad I found it. I wish I had known it sooner. In the week before, volume profile was here. That's written in stone. And if we go down and look at the 5-minute there, this was on Thursday. This was actually my trade from Thursday. My trade from Thursday, let me go back in Discord and see. I have a futures trading channel in Discord where I try to put my trades on as quickly as I do, but I don't charge for Discord because I'm not selling signals, nor do I believe in that. That was, let's see. No, that was March that was, let's see, 71. Hold on. Oh, this was Thursday. This wasn't this was like late at night. I wasn't trading this, never mind. But it did hold it. I traded off of, I'll bring the screenshot up here in just a minute. Just to let you guys see the bounce. Faster. Holds, breaks it. Still good for some money though. The trade from Thursday was this real quick trade where I traded between the 312, that would have been the Tuesday point of control, and the current week point of control, which is 72,070. So 72,070. There's the current week, right? All right, hold on. Let me see. Look, to bring up the day's session profile, let's do that. So now let's do the days. $312. There it is. So this was the 312. Go away, periodic. This was the 312 one, which is this day right here. That was on Tuesday of this week. This was the point of control for Bitcoin was 71,486. Close enough, yeah. And so as we got into day trading hours, down to the 1 minute, I'm sitting here looking. I basically just wanted to try it out on Bitcoin, pick up a trade at 71,486, and then be content to take it off at 72,078. Small move, but that is basically where price went to for the sake of a trade. I'm glad I'm out too, but good enough for a quick trade because it's within that day trading hours. And yeah. So how am I able to select? How am I able to say, hey, I don't want to go here. Hey, I don't want to go here. I was just content. I can't really explain all the secret sauce to you guys because I don't know it. But just something about that. I just wanted to play between those two levels to validate point of control on Bitcoin rather than overtrade. I'm content to just take one trade a day. And so you would be very wise to ask, okay, well, it didn't hold there. It went over. And, it didn't hold there. It would have stopped out. You're right. I just didn't trade those. And honestly, I can't tell you why I didn't, except that you know what, I will tell you guys. Let me have a little bit of real talk. And I posted this in my Discord. Today. So I have a very strong emotional attachment to Bitcoin. And that's because I've been into it for a very, very long time. I've been trying to short it for the last couple months with obviously not very good results. And of course, that's very bothersome. I mean, nobody wants to lose. Clearly, I am an idiot for trying to short something that is going to be the future of money if you listen to the Bitcoin maxis, but I don't agree with that. I just don't think that the technical grounding for Bitcoin is there. I just don't think it's scalable. But I do think that it has limited supply. And I think that if enough people buy it and don't sell it, the number will go up. So all these things about how it's going to replace the dollar and the whole world is going to be forced to use Bitcoin, I say no. That's bogus. That's BS. But you know what? If you believe that, and that makes you hodl throughout this rally, then it's a useful meme. So it's a useful meme, but still, I've also felt that the euphoria has been a little bit too early. And so I had what I've had before, which is on Wednesday of this week. I had a bit of a crisis. I started asking my friends in the Bitcoin social media, like, why am I trading? Why am I investing in stocks? Why would anyone want to start a business when clearly the best thing you can do is just buy Bitcoin and do nothing? It doesn't make sense to me. It doesn't make sense that... Now, I know that in investing, one of the best ways to make money is to sit on your hands and wait. That's true. Been true for 100 years. Jesse Livermore said it. He made the best money he made was by sitting tight, doing nothing. It's not by doing he made money. It was by sitting tight. That's true of investing. But should we take all of our cash and just buy Bitcoin? Is everything else worthless? Should we start an ice cream store if we want to make people happy? Should we open up a violin shop because we like music? No. Like, if you listen to the maximalists, they're like, oh, don't do all that. Just put your free cash into Bitcoin. And so I really had a crisis on Wednesday. I felt it very, very strongly. I mean, Jen, was I not a neurotic mess on Wednesday about Bitcoin? Yes or no? You know the answer. Of course, yes. I feel the market. Ooh, no. I'm not saying that I'm some Jedi or something like that. I am the market. You're the market. We're all the market. The reason that we have made the mistake of selling at the low or buying at the high is because of emotion. I really, truly believe my definition of price is that price is a reflection of the market's emotions, and it's made up of all the participants. I have let myself be emotional. A lot of people say remove emotion from trading. I mean, okay, that's cool to say, but we really can't. Like we money means something to us. Like we buy stuff with it. Okay, it affects us. Okay, we want more of it so we can buy more stuff. If we don't have it, our lives kind of suck. So we're going to feel about it. I really let myself feel that emotion, that FOMO that I was feeling, and really just kind of let it seethe within me and I just feel it, but not act on it. And it's amazing to me how I can just viscerally feel that emotion of FOMO. And at this point in my trading career, know not to act on it. But it's important. I would say that level 0 trading is feeling an emotion and then buying or selling based on it. Level 1 trading is feeling the emotion and choosing to do nothing. I'm there. We can all be there. Level 2, and I'm not saying I'm to this point, is feeling that emotion, feeling that FOMO, feeling that despondency if something's going against us, and then acting the exact opposite. That's level 2 trading. And I want to aspire to get myself to that point. I'm not telling you guys that I am. The way that I keep myself at level 2 and not level 0 is with rules. I'm not going to take a trade unless it fits my rules. And that's how I've, as such an emotional person, been able to trade successfully. I have rules. Because without rules, you'll do stuff based on emotion. But that's my little real talk moment for you guys. And I felt it. It was just, it ruined my day. Ruined my day. But you know what? I got up Thursday and I took a long trade based on point of control, and I made money on Bitcoin. That was my way of getting back into the swing of things. I give myself about a day's pity party. I will. I'll give myself that, but only a day, and then I'm going to hit it. I'm going to hit it, and I'm going to make money, and that's the way I'm going to handle things. And I know I have the skills to do that, and so that's how I'm able to get through this. But it's important for me to like relate that to you guys, because I know that if you're trading, you felt that emotion too, and acknowledge it. Acknowledge that you feel that way, and acknowledge all the times where you've sold the bottom or bought the top. I mean, you did that because you felt that way. Acknowledge that, own it, and try to like recognize that emotion in the future when it happens to you, because it can be a powerful indicator itself. I mean, the whole reason that I trade based on spikes, the whole reason that I make money now off of the spike indicator. Here's my recent trade with, BAX. I don't even know what BAX does. It's just a chart to me. But the whole reason that I made this indicator and I make money on it is because for years I would lose money when I would buy something. Like, it's at a 50% here. I have a real tight stop and my stop gets hit. Okay? I mean, how often do you guys have a stop loss and then something like this happens? A lot. Happened to me all the time. And then finally I said to myself, wow, like that happens a lot. I wonder if it's going to happen a lot in the future. Probably so. Let's trade it. So the thing that makes me money now came from pain. That's trading. It's not pleasant. Trading is not a pleasant job, guys. You don't want to do this for a living. Like, if you love and are passionate about anything else, do that. You have to really love this stuff. I love it. I love and voraciously attacked the information volume profile this week because I love it. I love to see price respond to these levels, and I don't even know like the money that I made. Like I try not to look at it. There's from trading and gambling are sometimes synonymous, and you never count your chips or you never count your money while you're sitting at the table. So let's just try to have a good month. Let's just try to have a good year. That's what I try to do. But yeah, that's my real talk moment about Bitcoin. Just to kind of follow up about the sentiment, because I know a lot of people want to know the opinion on it. It's all about this week's close on Bitcoin. Like that all-time high from November of 2021. If in a lot of Bitcoin chats I talk in, they're like, "Oh, trading is bogus. Trading doesn't matter. You know, there's no such thing as levels. There's no technical analysis sucks." You know what? If you just sit down and look at a 30-minute chart about how price has responded to that all-time high, the market knows it's there. It knows it's there. And the rule for me, what keeps me patient with Bitcoin or anything else, is the weekly close. Last week, last Sunday, the closing price of Bitcoin at 00 GMT was 69 giggity 012, and the all-time high. Let's see, hold on, we got it up here. Close. I swear it closed inside of it. That you're not going to tell me that's it. Anyway, it closed right at it. Am I looking at the end? Something must have changed because I remember it. I remember actually saying on Discord, hold on. It missed it by like a few bucks. I know it did. Because you see, the all-time high was 68,997, and oh, okay, I'm actually wrong. Okay, it closed right out that. So it technically closed above it. Oh well, this week's going to be important because now we've gotten into FOMO territory. I felt it. Everyone else did. A lot of people were trying to buy that breakout, but my rule is to wait for the weekly bar to close, or wait for any bar to close, because bar closings make you patient. Now, between now and Sunday, anything can happen, but you know what? With the advent of Bitcoin ETFs, I've said from the beginning, it's a Faustian bargain. What's the Faustian bargain? Well, look up the story of Faust. Was it the author was Faust? I don't know. I'm not a literary expert. But basically what it means is you get something good, but you sell your soul to the devil to get it. And by introducing ETF, you now have a Bitcoin market which is dominated by the stock trading week. And it was very interesting to watch here at the end of the day. In the last few minutes of the day, they tried to push the price up, and then before the day could close, they closed it back inside. This kind of trickery can happen now with Bitcoin because of the ETF. It's not been like this in the past. And, you know, as much as they talk about record Bitcoin ETF inflows, what happens when you have outflows? But anyway, I've been a bear on Bitcoin throughout this whole rally, so I'll be humble and say that anything can happen. But watch this week's close. It's going to tell you a lot, because just as a quick history lesson, the thing that killed the 2021 rally was these subsequent false breakouts. The premise is very simple. If something is bullish, people will keep buying it. You need to have people throwing care to the wind, going risk on, YOLOing their life savings into all-time highs. You know, what an all-time high break should look like is the one we had to get us to that point right here. You know, price hesitated. It hesitated. Bing. And then you have a big, solid OMFG couple of weeks. That's what an all-time high break should look like. That's people buying. So you need to see that. If you do, I have a bet with somebody where I'm going to dress up in a priest outfit as the priest of technical analysis and claim that Bitcoin is bullish. So I'm willing to self-deprecate myself to that. I might even, if I buy the outfit, I might even wear it on stream. So you guys will get to see that as well. But that's what we got to see this week. We got to see that close above the all-time high. All right, we're in the last phase. Holy crap, it's already 5 o'clock. Okay, get in symbols right now. We got to do a lightning round. We got to go quick. I got to go see that Canadian folk music. Let's see. Discord. Again, guys, Fridays, 4 p.m. Eastern. That's when I do this. Check the links below. Let me go back through chat. Hey, Jen, or everybody that's on Discord, can you give me a quick recap? Well, okay. We'll use yours first. Well, so Oh man, I got a lot to talk about. So, well, is this your pick, Jen? Is this your pick? Is there? I'm gonna shill it if it's your pick for boomers. Oh, you're short. I thought this was a healthcare old folks home thing. You want to long to a pullback. Okay, so you shorted it because you want to go long. You shorted it because you want to go long. Does that make sense? Uh-huh. But you want to long this, so you went short. Just think about that. QCOM. Oh yeah, Shogun put in QCOM. Basically, the premise that we've been talking about, and I think it's fundamentally sound, is boomers are old. They need to live somewhere. They're also going to get sick. What we as I'm a millennial, what we as millennials and Zoomers need to be thinking about, maybe Gen X too. Yeah, sure, why not Gen X? You guys are pretty silent, but you got money. I really want to, for the 10, 15-year horizon, want to be investing in things that boomers are going to take all that wealth they have and put into healthcare, old folks' homes. It seems obvious, almost too obvious to work, but sometimes the obvious does work. So, all right. I get it that you've got a trade going on here on it, but if you want to be long something, just get long it. All right. Let's see. We'll look at your stuff here in a minute. Casey, which of those do you think is the best? If you can put it in here. Okay, so Chestnut PGR. How do you calculate the target price? That's a very good question, Mr. Chestnut. Because this applies to NVIDIA. This applies to LLY, Eli Lilly. Okay, let me tell you where my thought process has gone. There's two ways that I know of for. Well, there's one way that people use for finding targets, and that's Fibonacci extensions. I don't really use Fibonacci's. It's not that I'm saying they don't work. I just don't use them, and so I don't have any experience with that. Typically, if it's a stock and it's going up, and in particular, this is Progressive. Actually, no, wait a minute. It's Warren Buffett owns Geico. He may own Progressive Insurance too. But when it comes to stocks or Bitcoin, I really think that when a stock is making all-time highs and it's a blue chip stock, you just got to put on your Warren Buffett face, and you just need to not ask that question. And you just need to own it forever. So that's the first way to do it. The second way is with Fibonacci extensions. But if I'm trying to be objective, when you don't have past price action, what I try to do, or I've been researching this. This is in my little research basket. Okay, like I don't have all the answers, but I'm trying to come up with one. Is I want to try to say, okay, I know in a lot of cases, price will pull back to 50% retracement levels, hold, and go up. That happens a lot. That's the fundamentals of my trading, right? Okay. And very often what will happen is you will find price will respect past levels of inflection, past highs and lows and things such as that. Not always, but I'm working on a rule set for doing just that, where you can kind of project by using it's still using like the Fibonacci tool in TradingView, but not using Fibonacci extensions, where I project like, okay, what would bring a 50% level up to a really solid matching level, and then that can basically give me a profit target. So in NVIDIA, I think that one of the ways that I was looking at this earlier is something like this, where if we didn't know about this past price action, this crazy, I would have said, okay, from here, and then I'm going to make it where the 50% matches up with 497.50, like that. And so that would have given me a price target of NVIDIA of about 880. Okay. Is that perfect? No. Are we ever going to get the tippity top of the high? No, we're not. But if we're looking for a rule on when to take profit of big rallies, I think this would be the one I would go with. But again, I'm just doing research. I don't have an answer for you there specifically. All right, let's check. Let's see. Yeah, it did get spiritual. All right, let's see. Let me go through here. Spike, did we talk about that, KV Vercare? I think we did talk about the spike on the Wednesday CPI release. That was a big deal. Not a big deal. Inflation's still kind of high. Let's see here. Norok, good evening. Thanks for the amazing stream again. You're welcome. I love doing this for you guys. I do it because I love to teach, and I like to generate opportunities for everybody, including me. At the start of the decline, I ask you if you think this is the start of a pullback. So what do I think today on the S&P 500? Well, my friend, we're all looking for the world to end. And by that, I mean stock market to crash. So what we have today is we do, in fact, have a close below the red line, the Tinkinson. Let's double confirm that with SPY. Yes. So I would say that on all days, in the past, we have some confirmation here. The trend is starting to get a little more quiet. But we're in a bull market. I'm really not going to get concerned until we violate the red line on the weekly, the Tinkinson on the weekly, the 9-period 50% level on the weekly. Because when we had that, I know I talked about this last week's stream, but in this little bull market we had from April until August, and then in August, the middle of August, we finally got a close below that weekly red line, and then a pull back to it, which was also 50%. That gave us that October down move. And so that's what I would look for, really, to kind of filter through the noise, is to look at the weekly. And I know that means that you're going to give up some ground. You're not going to pick the top, but I don't care about picking the top, remember? It's a very, very powerful tool for that kind of thing. Throughout the entire 2021, for the most part, we had a few hits of it. But for the most part, the weekly in a bull market really contains a trend. A little fake out right here, but busted above it, and then up. And then here you have that. So the down move in January of 2022, really, you had that close below it. You had it hold the 50%, the red line from the upside. That's big. That's big. That's what I look for. And again, that's what you had here in August. So really, what I would like to see, let me forecast this a little bit for you. So 9 periods, that's 1, 2, 3, 4, 5, 6, 7, 8, 9. We're going to throw out that bar, so we're going to be basing off these lows. And so next week, the red line is going to move up to here, to 500 on SPY. So 500 is going to be basically our point where we can come to, hold, and be good, or come through, and this is going to move up because we're making higher lows, and then possibly hold, and then that will be our deciding moment. So that's what I'm going to be looking for as this next couple of months develop. I'm going to be watching that red line. I'm going to be on the weekly bars. And I know everyone wants to catch the top, but that's what I'm going to be looking for. And then I'm going to cross-reference that with VIX. Now, VIX is getting a little bit elevated, or at least it was, but the last time VIX hit a resistance, which is, again, 50% of the October down to December move, that was on February the 12th. Let's look at the day. That was February the 13th, the week of February 12th. And so February the 13th, yes, I think I made a note on the Discord that, hey guys, that might have been a pullback. Yep, there you go. So when VIX hits major resistance, that is about the best thing to market timing that you can get. So that's what I'll kind of look for. I'm looking for volatility to rise. I'm going to look for price to get below that red line on the weekly. And then where I'm going to say if it's a dip or beyond is what it does on the VIX. We'll get there. I'll update you week by week. Keep asking that question. Again, get on Discord and ask me for a little more granularity as the days go along. But right now, we're still in a bull market. I say that knowing that I don't want to jinx it by getting too a little euphoric. But let me say it. We are in a bull market. All right. All right, let's see. Can't you also use volume profile plus the spike during the valley of death? Yes, you can absolutely use spike indicators, and you can end volume profile on anything. Speaking of the valley of the death, look what they did to my boy. They murdered my boy. Yeah, they're murdering Tesla. But I this week painfully did a volume profile look at this. And if we go back, let's just go back all the way to here. And we see, actually, hold on. I did it from, not from back there. I think I did it from back here. Yeah. So essentially we had the point of control of basically from January of 2023 all the way up to here. So basically this section of price, this era of price. Actually, we could probably incorporate more, but let's do that. Let's double confirm it. Hang on. We can do that with 2 of these volume profiles. Yeah, I think it's too confusing. But what I did say was there is a minor point, and trust me, I'm not going to paint too rosy of a picture here. There is a minor point at 161.72, which is a little bulge here in the volume profile, that price could stop and turn around. And while that sounds optimistic and rosy, there's a whole lot of nothing all the way down. So, and I'm asking despondent about this because I'm being Warren Buffett about my position in Tesla. Like, I like the company, even though as a price action analyst, I know better than to hold on to this because this is absolutely going into the valley of risk. It's the valley of risk is what I call it, and the valley of risk is essentially where price goes below a 50% level. In this case, the impetus for my trade was I got into Tesla here at 200. Woo, genius, goes all the way up. But then look what it hit. The point of control. I actually just now noticed that. And that's where we are right now. And I sat here for a week being given a great opportunity by the market to get out of break even. And I decided to be Warren Buffett about it. Now I got to ride it all the way down to 95. Why 95, you might ask? Wow, that's really far down. Exactly. Because taking out this low and scaring the crap out of people is what a meme stock like Tesla is going to do. So why am I holding it, you might ask? Well, because we all do dumb things. And sometimes I don't have my whip to self-flagellate myself, but that's what I'm doing with Tesla. I like the company, but Elon is picking a lot of battles with some powerful people, and I think they're punching his stock down. Anyway. All right, let's look at case season. I gotta go. Wes, why not Neo? Oh, Neo. Oh, somebody asked about Neo the other day. That's sorry guys. That's bag holding territory. All right, let's go through Casey's breakouts. We gotta call it because I gotta go see that Canadian folk music. WLK going the weekly. Let's clean things up. Making a new all-time high. Fresh breakout. I like this. I like this. It's not quite a spike, but I like that little shoot down and back up. This looks good. This looks good. STLD, Steel Dynamics, weekly close above it. I like it how it hesitated and then closed above it. This is a good fresh breakout. PSX, just making new highs, already been going too long. PGR, Progressive, again, just making new highs. We talked about that. PCAR, Jen, what are people doing with PCAR? I think you're in P-car, aren't you? Yeah. See, guys, this is what you do. You only buy winners. Just buy and hold. Yeah. Speaking of buy and hold, I have serious regrets about doing covered calls on Kroger. That's the one covered call that I did this cycle, and screw it. I'm not doing covered calls. It's annoying because I actually rolled this today out into September for an extra $30. It's not even worth my time. Yeah, PFE. Yeah, PFE is definitely still hung in there. I'm not mad at Josiah Gore for getting me into this because now we're back at break even. I remember Single G in Discord. He got a little upset because of some price action here on March 4th. March 4th, my friend Rich's birthday. But again, that's why we wait. See, this right here is a great example of why we wait for the bar to close. Because intraday, oh no, it's taking out the low. What do? We wait. So yeah, it's back. It's okay. It's okay. I'm not mad at you. All right. Let's see what else. PCAR is just freaking winning. FTAI, is it AI related? Winning. AMP just going up. You're gonna get a lot of these in your watch list, Casey. AER going up. I like those first two for their breakouts, fresh breakouts. Neo is a stock exchange. Okay, let's see. Neo is a Canadian stock, FFH. Wait, what? Neo FFH. Oh, it's FFH. Okay, is the stock exchange. Fairfax Financial Holdings, TSX. It looks like the Canadian Stock Exchange. That's freaking winning. Somebody's making money. So earlier, Mav had asked me. He's still in the chat. Here, Mav, is why I tend to not go jumping straight into spikes in this kind of pattern. Like if you remember, we were talking about NVIDIA. So my indicator is firing off a spike for NVIDIA that looks a lot like this one. But what you have to understand is, like, when you have like a really volatile up move like this, it can oftentimes just be noise. And so that's what I meant earlier when I was saying, and thanks for the example, by the way. That's why I love doing this, because people can point things out to me. This is why I tend to not trade these kind of spikes, like the one we have in NVIDIA or this Fairfax holding, is because when you're in a big bull trend, it can be just, this can just be noise. That being said, if we dug down here on Fairfax, what we would have had is we would have looked at, okay, here's the impulse, the move down, and we had it come up here on February the 12th, close above it, and start breaking, as opposed to on, let's see, that's the daily of that one, So far, NVIDIA was not able to come up and recapture. So don't have time to dig much into that. I have got to go. Yeah, guys, just buy Caterpillar winning. Absolutely, just buy winners. But no, I mean, I say that tongue in cheek, but it's really true. One of the things that I've owned, never given me any trouble, is Waste Management. Well, I mean, it consolidated, but I didn't care. LLY, but when you have something like Tesla, where it does this and doesn't win, you can be a little smarter than Warren Buffett. I say that as not someone that is, but clearly I'm dumb to hold on to it. But winners should win. And again, it also applies to Bitcoin, where you really need this weekend to close above that all-time high. Probably it will. I'll go ahead and say that. I'll admit it probably will. But you really need things to keep winning to go up. But I got to go. Thanks, guys. Have a good weekend. Trade wisely. We'll see you next week, 4 p.m. And click the links below. I got to go. Bye-bye. Have a good weekend.